Hello traders, and welcome to another video review. Today is Wednesday, the last day of the November 2022. Let's find out what is going on in the Forex calendar today. Plenty of important data are scheduled for release today. However, we got the CPI from Australia released already. We got manufacturing PMI from China released already. It was worse than expected, 48 points, while the forecast was 49 and the previous reading was 49.2, so not that nice data from the China. 5 to 11 we got scheduled a German unemployment change, as you can see here, and then at noon we got CPI from the Eurozone, which is apparently expected to drop from 10.6% to 10.4%. Not a big deal whatsoever. However, if the market will get surprised by the lower than expected CPI, the pressure for the ECB to hike the interest rates will be lower. And the New York session, what do we have here? 3:15, there is ADP Non-Farm Employment Change. 3:30, there is a GDP for the third quarter expected to increase from 2.6 to 2.7%. We got JOLTs Jobs Openinig scheduled for release at 5 o'clock together with the pending home sales. Half hour later we got Crude Oil Inventories, and 8:30 p.m. there's a scheduled talk or a speech from Fed Chair Jerome Powell. So the New York session seems to be very active, very busy, so it's worth to wait for the New York session today. Plenty of data scheduled for release from different kinds of economy here. So let's first start. I guess we should start with the euro dollar and some dollar related pairs. So let's find out what's going on the euro dollar first. 4-hour chart of the euro dollar is showing us the pin bar. It's showing us the pin bar just above the supposed wave 3 high located at 1.0480. This high was made at 1.0497, 17 pips above this high. So okay, it's a count. It's a valid count of the highs. Nevertheless, the target, the projected target, of course, for the wave 5 and for the wave A, as you can see, is located at the level of 1.0608, somewhere there. We got 161% expansion level. We got another expansion level. We got 61% of the Fibonacci retracement of the whole big wave down. And to be honest, if this is the 5 wave to the upside, made as an impulsive wave, then of course we are just waiting for the wave 5 and then decline in the wave B. So far the rally was capped at the technical resistance at the 1.0480. We got the decline back inside of the channel. However, the momentum is not moving away from the level of 50, from the neutral level. So there is a chance that after this pullback, after this consolidation here, intraday consolidation, we'll still be able to see the higher prices on the euro dollar. Maybe that today's data from the US will be a trigger for this kind of a move. So that's the euro dollar outlook, still slightly bullish. So if we take a look at the US dollar index, we should see this index in more bearish situation. So what do we have here? Let me just move it lower. There you go. We got very nice pin bar here. That's the pin bar on 4-hour chart, and of course this was the measure of the movement to the upside. This might be the end of the wave Y. So this is how it looks right now. If you want to know, this is wave X, this is wave Y. So right now there is a possibility for the wave Y to be simply completed, right? So complex correction might be completed. We have a nice bounce from the lows of 105.23. Not too much impulsive bounce here whatsoever. Nevertheless, it's still a valid bounce. We are approaching the level of 107.26, 107.45, which is the technical resistance. However, there is one more level I would have to put on the screen. So all of this, of course, is correct. All of these levels is correct. All of those levels are correct. Let me just, there you go. This is the level of the technical resistance as well, and all of that three levels are red right now because they are technical resistance as well. So those levels need to be, of course, changed to the green. Sorry, from green to red, and there you go. We have another technical resistance around here. So the possibility of the corrective cycle to be completed is high, right? So the odds for the completed movement to the downside are very, very high. So if we extend the upside move, then of course in that situation we can expect the euro dollar to go lower. So in order to see a coordinated move between the various markets, we should see the US dollar index going up, euro dollar going down. However, the euro dollar hasn't finished the wave 5 to the upside, so this wave Y might extend to the downside, and that's the last wave of the correction, and the euro dollar is in the last wave of the wave A, wave 5th. So we might see breakout to the downside somewhere towards 105, 104.62, and the last wave on the euro dollar. That would be a perfect example of the market dynamics between and the market correlation between US dollar index and euro dollar. However, please notice the fact that this is the WXY scenario, corrective scenario. It can still evolve into WXY, XXZ scenario, even more complex and time consuming. So there is still a possibility for more correction to the downside on the US dollar index. Only a valid breakout first above 107.88 and then above the wave W low, which is here at 109.27, would change the outlook to more bullish. The other thing is that the market needs to travel above the level of 109.27, but it needs to travel more than 3.3%, right? So this 3.3%, if this is the low, then the 3.3% is around, there you go, around here. That's the 3 point, somewhere there. So that level here, 108.75 is actually the overbalance level. So if you don't mind this kind of a level, breakout, as I said, above 109.27 will indicate return to the uptrend on the US dollar index. That's the US dollar index. We have some data from the US, so let's find out what is the SP 500 doing. This is 4-hour, of course, chart. Let me switch to daily. The market is now closed, so we can analyze it without any problems. This is, of course, the broken trend line. Let's remove it. And what do we have here? Let me just zoom in a little bit. What do we have here is the ABC, possible ABC to the upside, right? So this is the part of the chart that we would like to focus on. 100% is located at 4,110. Market been trying to fight with 4,041. It didn't break to the upside. So let me just expand this view. Oh, this is the style. Now I want to do 4,000. Let me just do this. And this is 100%. Where is the 61? The 61% was here, so it was already violated, and the market moved substantially higher than the 61% of the expansion. So basically, what we don't want to do, and what we don't want to see is the market returning below the 3,893. This is the technical support, because then the wave C will be terminated here sooner than expected, and of course market will move way lower. For now, we still expect the wave C to hit 4,114. Okay, so that's the outlook for the S&P 500. Still bullish, however, please watch the levels, please watch the support levels, especially because this one doesn't look that much bullish anymore. Maybe wave 1, wave 2, maybe wave 3 here, A, B, C to the downside as a wave 4. So we need a breakout to the upside. If there is a breakout to the upside on S&P 500, there should be an upside movement on the euro dollar, and the US dollar index should go lower. So that's the S&P 500. Let's take a look how the spot gold market is doing. And the spot gold market is apparently doing quite well, because the recent test of the technical support 1,729 was successful. There wasn't the uptrend resumption just yet, so we are still waiting for the market to move higher in order to break above 1,783 and hit the 38% of the Fibonacci retracement, and even travel higher towards 1,807, because this is the last swing high. So nice breakout, pullback, consolidation, waiting for the extension of the breakout higher. Momentum is positive, momentum is quite strong, so we should expect another move to the upside on gold as well. And last but not least, let's take a look at Bitcoin. What is Bitcoin doing? Let me just find out what is going on 4-hour chart and what is going on here. Very nice. Let me just zoom in. There you go. Very nice attempt to break out above 16,793. This level was rejected last time. However, what is concerning right now is that we are back inside this wide zone here. Plenty of the technical resistance here. And we got this pin bar shooting star on 4-hour chart of Bitcoin. It doesn't looks well. However, if there is a green candle here, we might see another extension to the upside. If we see a red candle here on a 4-hour chart, this is a valid signal and valid information for all of the bulls that the supply is coming into this market and might push the prices back inside of this consolidation. We've been here since the top was made at the 10 of 11 of the November. So it's almost almost 1 month, 3 weeks. We need 1 more week in order to see this as a monthly trading range. Okay, so the market participants, they don't know what they want to do with the Bitcoin right now. So please stay focused, please stay vigilant on this market, because any breakout here after this kind of a squeeze in tight range might be massive. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.